Bloomberg Technology. Coming up, the debate over health reform is now officially a go after a Senate vote that went down to the wire. We have the latest from Washington. Plus, a major rival capitalizes on the crises at Uber. How business is booming at Lyft as bookings soar over the second quarter. And fighting words continue to fly between two tech billionaires over artificial intelligence. We'll dig into the beef and barbs traded between Elon Musk and Mark Zuckerberg. But first, to our lead. Senate Republicans have issued a green light to bring the debate on health care legislation to the floor of the Senate. The move serves as a hard-fought step amid uncertainty about exactly what plan senators will ultimately be asked to vote on. The final vote was 50-51, with Vice President Pence serving as the tiebreaker. Senator John McCain, whose vote helped the motion progress, made his return to the Senate after being diagnosed with an aggressive brain tumor just days ago. Take a listen to his feelings on the repeal efforts going forward.
I will not vote for this bill as it is today. It's a shell of a bill right now. We all know that. I have changes urged by my state's governor that will have to be included to earn my support for final passage of any bill.
President Trump praised Senate Republicans for the vote, calling it a giant step to begin dismantling Obamacare. Joining us now live from the White House with the latest, our Bloomberg reporter, Shannon Pettypiece. So, Shannon, what is the reaction there at the White House?
The White House is trying to make this a victory. It is one step toward a victory for them in getting a repeal and replacement of Obamacare. But of course, there's a really long road ahead. And at this point, there is no bill that exists that could get the 50-plus Mike Pence tiebreaker vote needed to pass. That bill just doesn't exist now. They've been working on this for weeks. They haven't been able to thread the needle. Now they're in this sort of lightning round of trying to get it done. As you just heard that clip from McCain saying he will not vote for any bill that exists right now. He has changes he wants to make. We'll see what those changes are when he introduces them as amendments. But right now, the needle they're trying to thread is so fine that anything McCain wants to get introduced could also lose people on the other side. So while it looks like a victory now, if they aren't able to get something passed and every vote and every amendment they come up with, they can't get those votes, it's going to probably look even worse than if they never even started down this path to begin with.
Look, there have been so many twists and turns. Do you think today will be seen as a turning point or not?
Well, despite all the pessimism and seemingly impossible, need to be able to get this bill through, it seemed impossible in the House at one point. They had to pull the bill from the floor. The members went back. There was all sorts of angst about, the Republican Party and how divided it was. But the House pulled it together and they got something through. Part of that was because they had the Senate here as a check saying, OK, whatever we pass, the Senate will change. Well, now we've got the Senate. For all the no votes, people who didn't even want to proceed to debate, here we are. They were able to squeak it through to get it open to debates and amendments. So once again, sort of reviving something that everyone thought was dead. So do not count this bill out. Do not count Mitch McConnell out. It's not over till it's over. And they keep proving that things that we think are dead, they can resuscitate for just one more step in the process and drag members along with it, despite all the criticism that it comes with it.
Now, President Trump also continued his public berating of Attorney General Jeff Sessions. Bloomberg News' Margaret Talev was in the White House press room today and asked President Trump about this. Take a listen to what he had to say.
Well, I don't think I am doing that, but I am disappointed in the Attorney General. He should not have recused himself almost immediately after he took office. And if he was going to recuse himself, he should have told me prior to taking office, and I would have quite simply picked somebody else. So I think that's a bad thing, not for the president, but for the presidency.
Shannon, what is the very latest in terms of the Trump administration's plans for Attorney General Sessions, or whether Sessions himself might resign?
Well, I mean, based on the heated, all the Twitter attacks on Sessions over the past 24 hours, it really seemed like Trump wanted him out of the job. Of course, this has been going on for weeks, that he's been frustrated with Sessions since he said he would recuse himself from any matters having to do with the Russia investigation. But Trump has obviously, that feeling has been festering, that disappointment over that decision. But he's really ramped up attacks, and it kind of looked like he was going to either fire him or try and force him to resign. Now, if Sessions was going to resign, he would have done it already, though. So Sessions appears to be staying in place, and Trump appears that he does not want to go far enough to fire him. And part of the rally around Sessions move by the conservatives on the Hill and even on talk radio this morning coming to Sessions' defense could be part of that, sending a signal that they think that would be going too far to ask him to be fired. So right now you have an attorney general who does not appear to have the confidence and support of the president, but the president unwilling to do anything about it.
Meantime, a new report out in the Wall Street Journal quoting an interview with President Trump saying that Apple CEO Tim Cook has promised him personally 3 new manufacturing plants in the United States. Big, 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 the Journal quotes Trump. What is your take on this?
We've heard a number of these job announcements where Trump has said there's been something promised that would be done. Some of them come through, some of them don't, some of them aren't necessarily what they seem to be on the surface. I thought it doesn't look like Apple has commented on this at all yet, so I'll be looking for what they have to say. But this, for the president, is good turf to get back to. This is where he's strongest. Jobs, the economy, manufacturing. That's the message they want to hear. And he'll kind of get back on that message for a day or maybe a few hours. He's in Youngstown, Ohio later tonight, so he gets back on that message, but they always get derailed onto something else, onto Russia, onto attacking the media, onto, attacking your attorney general, and they lose this focus on jobs and the economy, which is one of the areas that really got him elected. So if he can stay on this message, it's good for him, but he'll probably be attacking Jeff Sessions in Ohio more than talking about manufacturing is a concern among people who support him.
All right, well, Apple hasn't commented in this story to the Wall Street Journal. We are also efforting our own comment from Apple. We'll bring you that if we get one. Bloomberg's Shannon Pettypiece in front of the White House. Shannon, thanks so much for that update. A stock we are watching, AT&T shares are popping slightly in extended trading. The company reported second quarter earnings that beat analyst estimates. It posted a surprise wireless subscriber gain, rebounding from a loss earlier this year. More importantly, showing it can fend for itself in a cutthroat price war. Also in the report, AT&T still expects the Time Warner deal closing by the end of the year. Coming up, venture capital funds keep getting bigger. We will chat with Maha Ibrahim, general partner at Canaan Partners, on their record-setting latest fund. And Bloomberg Tech is live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Online TV growth isn't quick enough to make up for cord cutting. According to Barclays, about 6 million subscribers have shut down cable or satellite service since 2010. The research also shows that within the next decade, some 31 million homes will cancel or cut back traditional TV services, while just 17 million will go for live online options. According to people familiar with the matter, Sling currently leads the online TV market with about 1.7 million users. In funding news, Canaan Partners closed its latest fund at $800 million. It's the firm's 11th fund and its largest in its 30-year history. Venture funding has been ballooning this year to highs not seen since the dot-com bubble. The surplus of cash helps startups stay private longer with money that would otherwise be raised on the public markets. Here with us, Maha Ibrahim, general partner at Canaan. Thank you so much, as always, for coming on the show. So $800 million, enthusiasm is high, obviously, and you guys actually capped the fund, right?
That's right. That's right. We were well oversubscribed and very fortunate.
So is there enough places to put all of this money that's being raised?
So our firm is a diversified fund, unlike a lot of others. So about 40% of what we do is healthcare and 60% is tech. On the healthcare side, we've had an incredible run of exits, largely due to the fact that we've been very disciplined in certain areas. Same goes for tech. And yes, we feel like there are a lot of areas. So
you've been at Canaan for more than a decade, so your memory goes back. I mean, what do you think of these comparisons to dot-com times?
There's no question that we're in heady times right now. But on the other hand, there's still so many companies that are amassing an incredible amount of revenue, traction, et cetera. I don't see that ending. I don't see a cliff like we saw in the 2000-2001 period. And frankly, there's no reason for that. There's a ton of momentum. There's a ton of money flowing into the system.
On one hand, you have companies staying private longer. On the other, you guys had like 30-some exits in the last 3 years, which is 3 times the average.
Yes.
How is that possible?
In addition to that, what we've seen is that some of our companies have been exiting a lot faster than they normally would. So our average time to exit for our deals has been less than 4 years, and this is both in tech and healthcare. We think it's because we take a franchise approach towards investing. So there are areas that we just go very, very deep in, and we mine them. We mine them in terms of networking, thesis, et cetera. And that's the secret sauce to Canaan.
If a company, if you get the sense that a company would take 10 years to go public or 10 years to exit, would you stay away from that?
No, no, no. We absolutely believe that we're building companies for the long term, but because we're taking this more thesis-driven approach towards investing, we're on the pulse of what the acquirers want and are thinking about, and that just inevitably causes companies to exit faster than they otherwise would. And then there are some that take 15 years, and that's fine too.
So what areas are hot where you think there are big opportunities? Where are you going to put this money to work?
So fintech is still very hot for us, financial technology investments. We spend a lot of time there in real estate and in insurance. We spend a lot of time in cloud, where I spend the bulk of my time. You'll see us do a few gaming deals, again, in e-commerce. And then on the healthcare side, anti-infectives, immuno-oncology, but again, very disciplined in our approach, as opposed to taking an index fund for venture.
Canaan is also celebrating 30 years.
Yes.
As a VC. You have 3 female general partners, which is 2 to 3 more than most other venture capital firms. And I'm curious how that changes the environment inside the firm and in the investments that you make.
It has been such an incredible, I'm incredibly fortunate to be at the table with my 8 general partners, and 3 of them being women. The conversations, we feel, are just a lot more inclusive. And as a fund, we feel like we're reflective of what the true entrepreneurial pool looks like. So that if a woman or an immigrant comes in the door, they're surrounded by people that have had similar experience that they've had, and frankly, much more comfortable.
I know you've been following this spate of sexual harassment stories. VCs have resigned, lost their jobs. Of course, there was a sexual harassment investigation at Uber. Are you surprised by this?
The unfortunate thing is that I'm not surprised. I'm surprised at the horrific nature of it, but I'm not surprised that it's happening. The problem is that, if there is a positive spin on this, it is this. The sexual harassment has happened. I'm sure there are more cards to fall, unfortunately. But it's really woken people up to the need for diversity and inclusion, both at the venture and senior investing table, but also from an entrepreneurial perspective. We need to be bringing up women, entrepreneurs, people of diverse backgrounds into investing roles so that all entrepreneurs feel welcome.
When you say more cards to fall, I know everybody is calling everybody. I'm curious, what kind of calls are you getting?
I am getting a lot of calls. I'm probably spending about an hour to 2 a day, either talking with entrepreneurs. I'm on the board of the NVCA, so the NVCA is taking a really serious look at what's going on and thinking about how to approach this topic in a holistic way. Talking with limited partners of ours. It's certainly top of mind. But
talking
again,
about what?
Talking about the fact that it is happening, talking about what we can do. Can we put notions into term sheets? Can we have, again, a more diverse pool of investing professionals around the table? There are many things like hotlines. So there are many notions being talked about right now, and my hope is that we can all come together as groups and, again, make this a more diverse and inclusive environment for venture and then spilling over to the entrepreneurial pool.
And I know women entrepreneurs have often come to you and
Yes.
You've been their advocate. I'm curious, have you ever found yourself in a position where you're a co-investor with someone who there's bad behavior alleged against that person, either before or after the fact?
I have been very fortunate for that not to be the case, but I'll tell you, I see female entrepreneurs on a daily basis. To a person, each one of them have told me a bad story. And this has been happening for 17 years in my career. So by no means is this a new thing, but we've got to put efforts finally into making it stop.
What are those efforts? I mean, Signing a decency pledge is sort of great in theory, but shouldn't everyone just be decent?
It's an incredibly low bar.
Do you need to sign something?
No, we shouldn't need to sign something. But, and I've said this again, I firmly believe that a huge part of this bad behavior stops when you have females and minorities at the investing table and in senior investing roles, because stuff like that will not happen. People, their behavior will be checked. And again, from a social psychology standpoint, I'm going to want to invest in people that look like me. So at my firm, we have 3 investing professionals out of 8 as female, the GP role, 40% are females, 25% of our companies were founded by women. That's not an accident, nor is it something that we did purposefully. It just happened.
The average is more like 6.
That's right.
6%
We've reached a
or
tipping
so.
point, and as an industry, if we can reach a tipping point, we've won.
All right, Maha Ibrahim, always great to have you here on the show
you.
of Canaan Partners. Thanks so much for stopping by. Coming up, it is a game of catch-up in the ride-hailing world, and this time Lyft is in the driver's seat. We'll break it all down next. This is Bloomberg. Tech billionaires Bill Gates and Jeff Bezos are both backing a local trucking logistics startup that competes directly with Uber. Convoy is a 2-year-old Seattle company that makes software that matches nearby and available truckers to a shipping job. On Tuesday, Convoy said it raised a new round of funding from Bill Gates' Cascade Investment and other backers. This latest financing totals $62 million. Convoy's existing investors include Salesforce's Mark Benioff, KKR's Henry Kravis, and IAC's Barry Diller. And it is a good time to be Lyft. The ride-hailing business has been booming while its biggest rival, Uber, faces an executive exodus and a string of self-inflicted scandals. In total, Lyft's gross bookings grew about 25% to more than $1 billion in the second quarter. That's more than $800 million in the previous period. The growth rate is also faster than Uber, which told investors earlier this month that it expected gross bookings to increase only in the mid-teens for the quarter. Joining us now to break it all down, Bloomberg Tech's Eric Newcomer, who covers both companies, and we've been looking for the hard data on how Lyft has fared as a result or during this time period of Uber scandals, and now we have it.
Yeah, it seems like it's doing pretty well. I mean, 25% growth quarter over quarter is pretty great. We don't know what the bottom line looks like, which is also, you know, ride-sharing businesses love to spend money on subsidies for growth.
Uber's bottom line isn't great either,
yes, right? Uber's has been narrowing. I think Lyft was something around 130 million in losses in Q1. And these gross bookings numbers are, you know, everything included. You know, everything the driver makes, everything Uber takes in. If you want to sort of estimate Lyft's take of that, maybe you multiply it by like 0.2. You know, they take like 20%. You get to somewhere, you know, off 1 billion, 200 to 300 million, maybe in revenue.
So talk to us about how much this has changed. Like, where was Lyft a year ago, or even 2 years ago?
Well, you know, 2 years ago, yeah, Uber was on this march to be the only player. I mean, I think that's the key fact here, that for a while Uber wanted to be sort of the single ride-sharing player in the United States, and that just doesn't look to be the case. I mean, Lyft is growing, you know, separately from sort of the absolute terms. It seems to be growing its market share. It's hard to get perfect visibility into that, but, you know, Uber's just not been able to block Lyft from establishing itself in markets and growing market share.
So what can you tell us about just how much bigger Uber's business is in absolute terms?
Yeah, so we don't know. Uber hasn't shared its Q2, but we think gross bookings are going to be at least like 8.25 billion. So, I mean, that's like more than 8 times on a gross bookings basis the size of Lyft. But Uber's a massive global business. You know, even though it's retreated from China and Russia, it still owns major stakes in those businesses. So it sees upside even where it's not actually getting revenue itself. So Uber's, you know, at least 8 times as big, you know, but you know, Lyft is growing on it.
How is Lyft capitalizing on the uncertainty at Uber?
I think they've been playing it pretty smart. They're not out there like trying to take too much credit. You know, when there was Delete Uber and Travis was on the advisory board, Lyft donated $1 million to the ACLU. But for the most part, they've sort of tried to keep it low key. Everybody's, you know, all smiles over there. They definitely know things are going well, but I don't think they've been trying to take too much. There hasn't been too much public gloating about what's been going on at Uber.
And I have to ask you every time, where are we on the CEO search?
You know, I'm going on vacation for 2 weeks in August, so I'm praying nothing happens then. I don't know. I think it doesn't seem like they've landed on a candidate yet. You know, there's still a huge vacuum over there. Every sort of major leadership position you could think of is empty. So the search continues, but no real update from us or anyone else recently.
All right. Well, I don't know what I'm going to do without you for 2 weeks, but thank you so much for joining us, and we'll try not to bother you on your vacation. Eric Newcomer of Bloomberg Technology. Coming up, financial firms like Deutsche Bank are pulling operations out of the UK on Brexit concerns, while some tech giants are expanding their presence in the country. Details from London next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. President Trump intensified the pressure on Jeff Sessions today, saying he wants the U.S. Attorney General to be tougher on leaks. Trump also says he's, quote, very disappointed in Sessions. He added again he would not have picked him for AG if he knew he'd recuse himself from the Russia probe. The U.S. and China are making progress on a new UN resolution that would impose additional sanctions against North Korea. That's according to Ambassador Nikki Haley, who also says it is in retaliation to its ICBM launch on July 4th. The House has passed a measure that would prevent the president from acting unilaterally to remove certain sanctions on Russia, as well as add sanctions against Iran and North Korea. The measure also would bar U.S. companies from investing in energy projects in which Russian companies have at least a 33% stake. The Saudi-led Arab alliance boycotting Qatar says efforts by the Gulf nation to counter terrorism are not enough to end the crisis. The Saudi-led bloc says the boycott stands until demands are met in full, and added 9 organizations to a list of terror groups it claims Qatar supports. Research on 202 former football players found evidence of brain disease in almost all of them. The report, published in the Journal of American Medical Association, is the largest update on CTE, that is a brain disease linked with repeated head blows. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Tuesday here in Washington. Right now, 7:30 Wednesday morning in Sydney. We're joined by Bloomberg's Paul Allen. Paul has a look at the markets there for us. Good morning, Paul.
Good morning, Elisa, and it's expected to be a positive day on the markets around the region indeed after those record highs that we saw in the US. Nikkei futures looking strong as markets there wait on a speech from the Deputy Bank of Japan Governor. Here in Australia, ASX futures up 0.8%. The market here waiting on production numbers from the gold producer Independence Group. It's going to be a big day for the Australian dollar as well. We've seen some impressive dollar strength against the greenback this year. Inflation numbers for the second quarter are out. That's expected to show some weakness, 0.4% growth for the quarter, down from 0.5%. Inflation may disappoint as commodity prices slip, and we're also waiting on a speech from the Governor of the Reserve Bank here, Philip Lowe. And that's about it from us here, waiting on New Zealand's June trade balance as well. I'm Paul Allen from Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Back to our top story this hour. Senate Republicans voted to begin the floor debate on their efforts to repeal the Affordable Care Act. The final tally was 51-50, with Vice President Pence casting the tie-breaking vote. President Trump reacted to the vote during a joint press conference with the Lebanese Prime Minister.
I'm very, very happy with the result. I believe now we will, over the next week or two, come up with a plan that's going to be really, really wonderful for the American people.
Joining us now from New York with the very latest, our Bloomberg News executive editor, Craig Gordon. So, Craig, what do you make of all the twists and turns and the decision to at least continue the debate today?
Yeah, look, it's an important step forward for the health care repeal effort that Donald Trump and the Republicans are endeavoring to do. But let's be clear, this is really a very, very small first step. And now the hard work begins. You have a lot of moderates that think the bill isn't generous enough, doesn't do enough to help Medicaid subsidies in their states and help people stay on health care. You have conservatives on the other side who think it's too generous and think it spends way too much government money, doesn't do enough to bring down the deficit. So, you know, while they did manage to get onto the debate, and that's not a small thing, really the hard work begins now of crafting a bill that all the parts of the Senate on the Republican side can come together. Mitch McConnell has not been able to do that up till now. He's got a couple of weeks to try before recess. We'll see if he can do it.
How much do you think President Trump's posturing on this and warnings to Republicans are actually impacting the decisions that they're making?
Honestly, I think it helped around the margins some, but I wouldn't overstate it. I mean, look, all of these people ran, for the past 7 years on "we will repeal Obamacare if you put us in charge of the federal government." The Republicans control the House, they control the Senate, they control the White House, and it appeared this week that they were in great danger of actually not being able to fulfill that promise. I think when that reality began to sink in a little bit, it focused the mind, and they decided to take the vote. It's also in the Senate, it's sort of a tradition. Taking a vote to start debate is a kind of an easy vote at one level, because really that's what the Senate does, it debates things. So sort of going on to the bill and debating it is actually not a terribly hard vote. The real vote comes when they have to say yay or nay to repealing Obamacare and replacing it with a plan that so far is not yet written.
Meantime, the House just in the last hour voted on sanctions on Russia, Iran, North Korea. What can you tell us? I
mean, this is a really interesting piece of legislation, mostly because it partly ties the hands of the President of the United States. Usually there's a very, big fight between the executive branch, the White House, the legislative branch, the Congress, over who gets to control things like sanctions. The White House guards that right very jealously. But in this case, the Congress wanted to pass a bill that sort of bound Trump from being able to unilaterally lift sanctions on Russia, frankly, over fears of this current investigation, that there was collusion between Russia and Donald Trump's campaign. So the White House sort of went along with it. It knew that the Congress had the votes to pass it, so they kind of had to roll along with the punches on that one. The bill also does impose some new sanctions on Russia and prevents some U.S. energy companies from getting involved there. So it really puts the three sort of hottest hotspots in U.S. foreign policy, Russia, North Korea, and Iran, on notice that Congress really wants to crack down on what they're doing.
All right, Craig Gordon, our Bloomberg News executive editor. Thanks so much, Craig, for that update. I know you'll continue to keep us apprised of the goings-on. Meantime, out of the UK, Trade Secretary Liam Fox traveled to Washington this week to secure a trade deal as soon as possible after leaving the European Union. On Monday, Fox spoke to Bloomberg TV to discuss the current state of play.
Ultimately, we're setting UK conditions, we're setting UK standards. We're neither going to be members of the European Union, nor are we totally bound to the United States. So that's what a negotiation is. We'll try to work out what's in our mutual interest.
Meantime, President Trump weighed in this morning on Twitter, writing, "Working on major trade deal with the United Kingdom could be very big and exciting. Jobs. The EU is very protectionist with the U.S. Stop." However, economists and trade specialists have warned any deal will be difficult to deliver, given the U.S. negotiators' experience and potential disagreements over who exports more. Let's get out to our Caroline Hyde in London, who has an update on the negotiations. Caroline, what is the latest?
Yeah, Emily, it's fascinating, the tussle of basically who's more important with whom. And it is, of course, known that the US probably could take the lead when it comes to hard case at the negotiating table, because the UK is so dependent on trying to get these new trade deals in and around themselves as they exit the EU. This is big money, this is big jobs we're talking. And notably, actually, it's really important to the US. 500,000 jobs are actually supported in the United States by trade with the UK. That's what the UK government's trying to say. Meanwhile, check out this function on Bloomberg. ECTR Go is what you type in if you've got a Bloomberg terminal. This really shows you the amount of trade between the US and the UK. And you can currently see that who is the #2 trading partner of the United Kingdom? It is the United States. We're looking at $113 billion worth of trade done over the year 2016. Now, interestingly, maybe that euphoria coming from Donald Trump in his tweets is signaling how it could be even better. $50 billion better? That's the question. That could be added between the trade between the two countries, Emily, if you removed some barriers, but it's not going to be easy to achieve.
Now, interestingly, despite Brexit concerns, U.S. tech companies have been very keen to show their commitment to the UK.
Totally right. Today is a perfect example of that. Amazon, it's unveiling its new offices, new headquarters in the United Kingdom. They're literally just down the road here from our studio here in the United Kingdom in London. And we're seeing that they're saying they've taken on more floors. Why? Because they want to increase the amount of people they're hiring even more. 450 more people than originally planned. These are going to be technical employees. They're going to have 900 of them. This is all about expanding Prime Video into Europe. But Amazon had already, at the beginning of 2017, said that they would add 5,000 jobs in the UK, and they're not alone. We've heard from Alphabet's Google. They said they'd add 3,000 by 2020. We heard from the likes of Facebook, of Snap, of Apple, all of them pledging their allegiance almost to the UK when we heard of Brexit. Quite the reverse when you're looking at some of the banking sector, in fact, when you've got worries, predictions of 10,000 jobs to go in banking and 20,000 roles to go across financial services in general. Amazon today said, quote, they're very optimistic. Will not impede, this is notable, they say Brexit won't impede about hiring talent. It won't make it more difficult. Well, I've just been on a rooftop near here with the so-called Future 50. These are a celebration of the 50 fastest growing companies in the United Kingdom in the tech sector, as outlined by Tech City UK. And speaking to those founders, they're saying, we're worried about getting talent. How can I persuade a developer in Portugal or Spain to come over to me in the United Kingdom when I don't have any certainty of what they'll be offered in terms of an EU exit from the UK's exit from the EU? I don't know any certainty how they're going to be able to be employed here. It is hitting smaller companies, even if it doesn't stop the big tech giants.
And also you've got cash going in the opposite direction across the pond from the UK to the US, right?
Yeah, this is an interesting deal of all deals to be announced today, because this is Sage UK. This is one of the biggest tech companies listed here in the United Kingdom, one of only 2 tech companies on the FTSE 100. And Sage is splashing the cash. They are spending $850 million on a US-based company. In fact, very near you over on the west coast of the United States. They're buying into a company called Intact Corporation. This is all about expanding their presence in cloud. This is, again, an enterprise software company that Sage competes with the likes of course, well, Salesforce and whomever else there might be, Oracle, for example, SAP. And they're buying into Intact because they want to keep on beefing up their cloud offering. They want to focus in particular on small and medium-sized enterprises. But $850 million, it's a lot of money, particularly when the Great British Pound is down some 12% over the course of this year.
All right, Bloomberg's Caroline Hyde for us there in London. Thanks for breaking it all down. Meantime, fintech startups are on pace to see a funding reach a record as insurance, wealth management, lending, and blockchain-related companies attract new dollars. According to a new report from CB Insights, there have been 496 deals globally so far in 2017, raising a total of $8 billion. That's roughly $6 billion shy of the yearly record hit 2 years ago. Now, in the past 3 months, 5 new fintech startups hit valuations of over $1 billion. Coming up, electronics giant Xiaomi is gearing up its plans in the competitive fintech sector. Next, we'll hear from its head of consumer lending. This is Bloomberg. Adobe will stop its Flash service at the end of 2020. Flash is the separate plug-in tool that improves graphically intensive activities online. The service has long faced criticism for its cumbersome user experience and vulnerability to hacking. Adobe made the change in collaboration with Apple, Alphabet, Google, Facebook, and other tech companies, and is encouraging developers that currently use the service to seek other options. And despite increasing regulation of China's financial sector, Chinese mobile phone maker Xiaomi is pushing into online lending and other P2P financial services. Speaking in Shanghai, Xiaomi's head of consumer lending, Shay Chen, tells Bloomberg's Asia correspondent Stephen Engel that China's fintech pie is big enough for them.
Over the past few years, we noticed a lot of problems in this industry. This industry needs some regulation in place to enforce the activities and behaviors, and to make the industry to develop in a good way.
Is it important then to innovate before those regulations stifle the innovation?
Well, this is it is difficult because innovation sometimes needs more space to innovate. At the same time, if a lot of players in the market are not self-contained, regulated, the government and the regulation rules needs to be in place to make sure everything is fine.
What is the biggest risk to you, though?
First is risk management. Many people are the debt-to-income ratio is so high, some of them may have trouble to pay back. And the other side is financing side. Over the past few months, we've seen the cost of fund increase so huge and squeezed our profits. So that's two risks I've seen.
Now, Lei Jun, your chairman, has talked about the troubles that Xiaomi has had of late, losing a little bit of market share, also sales coming down. He talked about maybe the company grew a little too fast. But in financial services, are you a little bit late to the game?
Well, I wouldn't say it's late. It's just about the timing to extend our business into this space. We have over 200 million phone users and over 60 million IoT devices connected. So that translates into a lot of customers.
But are you at a disadvantage because you don't have the nearly billion users or whatever that WeChat has,
yes,
and you don't have the multi platforms that Alibaba has? Mm-hmm. So you're limited by how far you can go.
Chinese market is huge enough. So as I see it, we have enough space to grow. Even we have so huge monsters, competitors in the market.
Monsters?
No. Maybe I take this back. I mean, big players in the market, but we still have the space to grow.
That was Xiaomi's head of consumer lending there, Shay Chen, with Bloomberg's Stephen Engel. Coming up, the public battle between two tech titans, the war of words between Elon Musk and Mark Zuckerberg about the future of artificial intelligence. And a quick programming note, coverage of earnings season continues on Bloomberg TV. Wednesday, the Bloomberg Daybreak Americas team will be speaking to Ford CFO Bob Shanks on the automaker's results. You can catch that conversation 7:30 a.m. New York time. This is Bloomberg. It is the battle of tech titans over the future of artificial intelligence. In one corner of the ring, Tesla's Elon Musk warning that AI may be a potentially existential threat to the human race. On the other side, Facebook's Mark Zuckerberg, who said this past weekend that he's very optimistic about the technology and thinks Musk's doomsday scenario is, quote, pretty irresponsible.
With AI especially, I'm really optimistic. And I think that people who are naysayers and kind of try to drum up these doomsday scenarios are I don't understand it. I think it's really negative, and in some ways I actually think it's pretty irresponsible, because in the next 5 to 10 years AI is going to deliver so many improvements in the quality of our lives.
Musk responded on Twitter Tuesday saying Zuckerberg's, quote, understanding of the subject is limited. Joining us now to further debate, our Bloomberg editor-at-large, Corey Johnson, and our Bloomberg tech reporter, Sarah Fryer, who covers Facebook. So, Sarah, I'll start with you. What is Elon's argument here?
Elon is, for the last couple years, just been beating this drum about how afraid we should be about the eventual takeover of the human race by the robots. It sounds like
Larry Page's robot
fiction.
army specifically has warned about.
And you know, there was a few weeks ago, he spoke to a conference of governors and said, we need to be very proactive about the regulation of artificial intelligence before it's too late. Because most regulation in the government is, you know, once something bad happens, then you react to it. He said that by the time something bad happens in terms of the AI taking over, it will be too late. So.
Meantime, Zuckerberg is saying, look, we're already on this path.
Yes.
I think AI can be helpful in a number of ways. It's not, the future does not look as dramatic to him as it does to Elon. Corey, give us the other side.
Well, I think, you know, when Facebook looks at how they're trying to use machine learning and artificial intelligence, they're trying to, within the realm of Facebook, come up with faster answers to the things that people are discussing, get them closer and closer to services where people can spend money, either in Facebook or just use Facebook and Facebook Messenger in particular as a forum for making a lot of decisions and doing a lot of things. I think when Mark Zuckerberg looks at this, you know, it's not unlike his view towards privacy, which is that because I'm a benign and kind person, you should expect that the technologies that come from my company should be kind and benign. I think it's also important that these are people who have all kinds of advisors and all kinds of public posturing. These aren't two knuckleheads sitting on their couch on Twitter. You know, Mark Zuckerberg very much wants to put this image out there of we're technologically friendly. Technology is your friend. I'm your friend. Facebook's your friend. Love us. Elon Musk wants the governors and everyone else to think I'm a visionary genius. I'm imagining a future you can't possibly imagine. Loan me money so I can build electric cars and spaceships. So I think.
And Elon does say, you know, I've seen things you haven't. I know more than the rest of you about this, and I'm in a
he's
position
definitely
to
saying I know more
yeah.
than the rest of you, and I know more than Mark Zuckerberg.
Is Elon
He's
being dramatic, or does he have a point? Because there are a lot of unknowns.
I mean, he has
right?
a point, but at the same time, Zuckerberg doesn't want to stop progress in its tracks just out of fear, and that's what he's saying. I mean, there's so many things to fear about Facebook giving your data to this sort of nebulous organization, and you're right, Mark is trying to humanize it. I mean, he's going out there, he's being friendly, he's meeting people around the country, and trying to be unthreatening and approachable.
Think about what his business model is, right? Mark Zuckerberg's business model for his company is to get very intrusive information about people.
It's about being open.
And put it out there in a friendly way. Well,
right.
I wouldn't say it's about being open. It's not about sharing the information with everybody and you know, people are providing information, Facebook's using it and trying to put it out there in a nice way. Elon Musk's business model is, I'm smarter than you, I can see the future and you can't give me your money.
Sarah, this is not the first time they have sparred in public. So
Right.
what do you make about the public nature of this?
It's so rare. I mean, Zuckerberg, like we spoke about, he's been going out and doing his tour of the country, trying to relate to people. It's so rare that he says something negative about somebody else publicly, let alone a mogul, right? And
the last time this happened?
The last time this happened was when a very expensive disaster occurred. There was this rocket that was supposed to take a satellite for Facebook into space to spread internet access to underserved populations, and it was Elon Musk's rocket, and it blew up on the launch pad. And Zuckerberg was so disappointed that he wrote a public post saying that he was disappointed in SpaceX specifically. So this isn't the first time that the two have sort of sparred publicly.
Mark, I mean, Elon does cast a little bit of shade on Twitter.
Oh, yeah. That's his thing.
He's cast some towards me. He's blocked me on Twitter, so I don't have to be subjected to this anymore.
It's the opposite of what Zuckerberg does.
Do you know of this?
You're on Elon's blacklist?
He has blocked me on Twitter, so yes, I don't get to see the shade he's casting on Twitter.
Sure, he'll be very happy to see this segment. All right.
I'll live without it.
We'll leave it there. We'll see if anything develops on social media over the next few days.
I won't see
Thank you both. Corey Johnson, our editor-at-large, Sarah Fryer, who covers Facebook for us. Thanks so much. And that does it for this edition of Bloomberg Technology. On Wednesday's show, Facebook earnings are on tap. We'll have full reaction and analysis. That is all for now. This is Bloomberg.